Welcome, curious minds, to another deep dive. Today, we're plunging into the fascinating world of decentralized finance. Specifically, we're looking at a protocol that, well, many consider a fundamental pillar of the DeFi ecosystem. We're talking about Aave, and the big question on everyone's mind right now, can it rally all the way back to its historical highs? Maybe even hit that ambitious $600 mark. We've gathered some truly fantastic source material for this, a collection of in-depth articles, research papers, market analyses, really good stuff. Our mission today is to sift through all this data, explore the potential catalysts, understand the very real challenges it faces, and ultimately give you a comprehensive sort of 360-degree picture. What would it mean for Aave and for the broader DeFi space if it actually reached that target?
Exactly. And Aave isn't just, another name on a crypto ticker. It really represents a foundational component of decentralized lending. It's a critical piece of Web3's burgeoning financial infrastructure. Understanding its potential path and all the intricate factors influencing it, market dynamics, tech innovation, institutional interest that provides crucial insights. Insights into the health, the maturity, the future direction of DeFi itself. For Aave, hitting $600 isn't just about a price point. It's a profound statement that could reshape perceptions across crypto and traditional finance. It signals a validation, really, of DeFi's core ideas and its resilience.
Okay, let's unpack this and set the scene a bit. Where exactly does Aave stand today? In the grand scheme of things, our sources show an Aave currently hovering around, $85 to $100? Somewhere in that range? But that feels like a world away from its glory days, doesn't it? Quite a climb just to get back to where it once was.
It absolutely is a significant climb. To really put the current price in perspective, you have to look back at its all-time high. That was approximately $661.
Okay.
Reached with, immense market excitement back in May 2021.
Wow, $661. Okay.
Yeah, and that peak isn't just a number. It serves as a crucial benchmark for our whole discussion today. It's like a North Star, showing what was possible. So when you compare today's price, let's say around $90, to that $661 peak, you're looking at roughly a 6x move just to touch that $600 mark we're talking about.
A 6x.
Right, and that delta, that difference, isn't just a simple percentage. It dramatically reflects the boom and bust cycles we see so often in crypto. We all know them.
Oh, yeah, the roller coaster.
Exactly. Intense speculation, then sometimes brutal corrections. But within that volatility, this gap also highlights the potential. The potential for significant recovery and growth. The key, though, and this is where it gets interesting, is if the market conditions and Aave's own strategy align perfectly.
Right, it needs everything to click.
It does. This journey back towards $600 sets a huge challenge for Aave's resurgence. It illustrates the market energy, the renewed belief, the sustained capital it would need. You can sort of visualize it like a mountain peak, that $661 ATH compared to the valley where the price is now.
Yeah, that's a good way to put it.
The journey to $600 isn't just climbing up from here, it's climbing back towards a previous summit. Demands a lot of energy, a rekindling of belief.
So if a love were to reach $600, okay, obviously a great return for some investors, maybe life-changing for early folks, but bringing it so close to that historical peak, what does that signify beyond just the price itself? What's the deeper meaning?
Well, what's truly fascinating here, and I think this is critical, is that a $600 target isn't just some arbitrary number on a chart. It would effectively mean nearly reclaiming its historical peak. And that goes way beyond simple financial gains.
Right.
It would be a profound statement about market sentiment. And maybe more importantly, the reestablishment of confidence, not just in Aave, but in the wider DeFi sector as a whole.
So like a bellwether for DeFi's recovery.
Precisely. It's not just recovery. It's like a psychological victory for the entire market. Hitting that level would strongly suggest Aave hasn't just recovered, but has entered a period of sustained, mature growth, resilience, robust development.
Showing it learned from the downturns.
Exactly. It would signal that the hard lessons, the exuberance, the vulnerabilities, the regulatory scares, they've been successfully integrated. It's about proving Aave can weather the storms and come out stronger, more relevant.
And that validation, that could be huge for attracting bigger money, right? The institutions.
Huge. This kind of validation can be the trigger, the thing that unlocks those vast pools of institutional capital that have been cautiously waiting for a leader to show sustained resilience. It validates that whole build through the bear market narrative, proves that utility and innovation can beat speculative busts.
Sets a new benchmark for success beyond just hype.
Absolutely. And that shift in perception is critical for attracting new waves of capital, both retail and institutional. It changes the story around DeFi's long-term viability.
Which leads us right to the next question. Why does Aave matter so much? What makes it such a strong contender for this kind of rebound?
Yeah, before we dive into all the factors that could push it higher, let's establish why it's such an important player. It's clearly not just another DeFi project, right? It feels different.
Absolutely. It holds a unique, almost foundational position. Aave is universally recognized as one of the preeminent DeFi lending protocols, a true cornerstone. It's not just participating, it's a layer that much of the DeFi ecosystem relies on.
And the billions in TVL reflect that trust.
Exactly. Total value locked, TVL, that's a key metric. It shows substantial trust, immense capital from individuals, funds. They've put it into the system, and it's not just about liquidity, it's about belief in its security, its efficiency, its future potential.
And it supports a wide range of assets, too.
An incredibly wide array.
Yeah.
Major cryptos like ETH, various stablecoins, which are essential, for navigating volatility and providing capital efficiency. And crucially, it's pioneering the integration of real-world assets. RWAs, we'll definitely dig into that more.
Think of Aave like a vital artery, maybe the central pumping station in the DeFi circulatory system.
I like that analogy.
Yeah, it's indispensable infrastructure, designed to let capital flow efficiently, productively across the ecosystem, earn yield, leverage assets, access liquidity, all without traditional banks.
And its history of innovation is key too, right? Flash drones?
Profoundly key. It famously introduced flash loans, a truly groundbreaking DeFi primitive, uncollateralized loans, but only within a single transaction block.
Explain that again quickly. How does that work?
Okay, imagine you spot a tiny price difference for, say, ETH on two different decentralized exchanges, a fleeting opportunity. With a flash loan, you could instantly borrow a massive sum, millions, potentially buy low on exchange A, sell high on exchange B, repay the loan, and keep the profit, all in one single transaction.
Without putting up your own capital first.
Exactly. Zero initial capital needed beyond gas fees. It's incredibly powerful for arbitrage liquidations. It keeps the market efficient.
Wow, okay. That's pretty revolutionary.
It was. And that capacity for innovation is ongoing. They have the Aave V4 roadmap, promising more enhancements. Continuous cross-chain expansion, too, extending beyond Ethereum to layer 2s, other ecosystems. This constant evolution is absolutely key to staying relevant in such a fast-moving space.
Right. So here's where it gets really interesting. It's not static. It's constantly evolving, almost reinventing itself. That adaptability sounds powerful. Okay, so if Aave is this vital, evolving protocol, what's actually going to drive it towards $600? Our sources point to a DeFi resurgence as a primary driver. What does that mean in practice? How does Aave benefit when DeFi heats up again?
Well, connecting it to the bigger picture, a general sustained inflow of capital back into DeFi during the next crypto bull run is probably the primary catalyst, almost foundational. We've seen these cycles before, right? Bitcoin, Ethereum gain momentum, confidence returns.
And money flows down into DeFi protocols seeking yield.
Exactly. Capital flows almost predictably into established high-utility protocols. Aave being a leader, well-established, reputable, it's a natural beneficiary. When sentiment turns positive, capital actively seeks yield, leverage, utility in DeFi. Aave is right there.
So more borrowing, more lending activity.
Precisely. In a bull market, users are more inclined to borrow against appreciating assets that drives lending demand way up. And those holding stablecoins, they're actively looking for attractive yields. That funnels massive liquidity into protocols like Aave.
Creates a positive feedback loop.
A powerful one. Plus, Aave tends to track broader market momentum, especially ETH and BTC. A sustained uptrend in those creates a really positive environment for strong altcoins like Aave.
So it's not just a rising tide lifting all boats.
Well, it is, but Aave is maybe like a supertanker in that scenario, positioned to benefit disproportionately as capital comes back.
Now, this next one feels like a potential game changer, especially from a traditional finance perspective. Institutional adoption. How is Aave specifically positioned, maybe uniquely, to attract those big players, the TradFi giants?
This gets to a really important point about maturation and, crucially, regulatory compliance in DeFi. Aave Arc is designed precisely for this. It offers what they call permissioned pools.
Okay, what does that actually mean?
It means regulated institutions can participate in DeFi lending while strictly adhering to necessary KYC/GM rules. Know your customer, anti-money laundering. See, traditionally, institutions have been hesitant, understandably. The anonymity of public blockchains, lack of clear regulation.
Yeah, too much uncertainty for them.
Right. Aave Arc effectively creates a secure, compliant on-ramp. It verifies identities at the user level, screens participants. They then operate within a separate compliant pool, like a walled garden.
So they get the benefits of DeFi efficiency, but with the regulatory certainty they need.
Exactly. They know who they're interacting with within that pool while leveraging the underlying smart contracts. This initiative is critical because it bridges that huge gap between TradFi and DeFi.
Potentially unlocking massive amounts of capital.
Vast amounts. Pension funds, asset managers, corporate treasuries, folks looking for new yield sources but needing compliance. Imagine that VIP lane in DeFi, built just for them, offers the security and compliance they require.
That's more than just attracting capital. It's legitimizing DeFi in their eyes.
Absolutely. A crucial step for broader adoption and long-term sustainability.
Okay, beyond lending, the Aave token itself has a vital role, doesn't it? How do its tokenomics contribute, drive demand, help push towards $600?
Yes, the tokenomics are carefully designed, tied directly to two critical functions: protocol security and decentralized governance. It's not just speculative, it has fundamental utility.
Like the safety module.
Exactly. Staking Aave is crucial for securing the protocol via the safety module. Aave holders can stake their tokens to act as a backstop. Like insurance, in case of a shortfall event, bad debt from extreme markets, may be a smart contract exploit.
So it provides assurance for depositors.
It does, reinforces trust. And in return for staking, participants earn rewards. That incentivizes long-term holding, active participation.
And governance, voting on proposals.
Right. Participating in governance, voting on key proposals, upgrades, parameter changes that further increases demand for the token. Aave holders aren't passive. They're active stakeholders shaping Aave's future.
So it creates another positive feedback loop.
A powerful, virtuous one. As the protocol grows, becomes more integral to DeFi, TVL expands, user base grows. The utility and demand for the Aave token increase too, driven by security staking and the desire to influence the protocol. That utility-driven demand is fundamental.
We often hear about high gas fees on Ethereum being a barrier, especially for smaller users. How is Aave tackling this to attract more people, to scale?
That's where Layer 2s come in. Above strategic expansion onto solutions like Optimism, Arbitrum, Polygon. That's a hugely significant catalyst. By expanding onto these networks, transaction costs drop dramatically, often by orders of magnitude.
Making it much cheaper to use.
Vastly cheaper, and more accessible to a much broader user base. Ethereum mainnet, while secure, can get really expensive at peak times. Prices out smaller users, makes small transactions unfeasible.
Right.
Layer 2s process transactions off-chain, bundle them up, settle them efficiently on mainnet, contributes costs, increases speed.
So it's not just about cost, but user experience too.
Definitely. Less friction encourages more frequent interactions. Borrowing, lending, staking. Lower costs remove that barrier for smaller users, boosts overall activity, user engagement, and critically, the TVL across all Aave's deployments.
Like express lanes on the DeFi highway.
Exactly. Making transactions faster, cheaper, opening it up to more people. This multi-chain strategy is essential for capturing more market share and staying scalable long-term.
Okay, real-world assets, RWAs, and its own stablecoin, GHO. These sound like really big, ambitious moves. Pushing beyond just crypto, what's the potential impact here? For Aave's utility, its ecosystem.
Well, what's truly fascinating here, and it really shows Aave's innovative spirit, is this multi-pronged push into RWAs and launching its own stablecoin, GHO. These aren't just small tweaks. They're strategic expansions that could fundamentally supercharge the protocol.
How do RWAs change things?
Integrating real-world assets vastly broadens the scope of collateral Aave can accept. Think tokenized invoices, fractionalized real estate, carbon credits, bringing tangible off-chain assets onto the blockchain as collateral.
Wow, okay. That taps into huge traditional markets.
Exactly. Allows Aave to access massive new pools of capital, provides more diverse, maybe more stable collateral base, reduces reliance on volatile crypto assets. It's about building that bridge between the trillions in TradFi and the DeFi ecosystem, creating totally new lending opportunities.
Stablecoin.
GHO is Aave's native, decentralized, over-collateralized stablecoin. Increased adoption and use of GHO within the ecosystem could dramatically boost liquidity and utility. As users mint GHO using their collateral on Aave, it becomes a core medium of exchange within the Aave world.
Making it more self-contained.
More self-contained, more efficient, more resilient, reduces reliance on outside stablecoins, potentially enhances yields, creates new financial tools using GHO. It's about building a really holistic, integrated financial suite that captures value in multiple ways.
So putting it all together, it really sounds like they're building much more than just a lending platform. It's like a decentralized financial super app in the making. Okay, but no journey to the top, especially in crypto, is smooth sailing. There are always risks. What kind of competition is Aave facing? It feels like a crowded space.
It is an incredibly competitive environment. That's definitely a significant factor. Aave faces persistent competition from other established players. Think Compound, a longtime rival.
Yeah.
MakerDAO, with its DAI stablecoin. These are formidable protocols with deep liquidity, strong user bases.
And new ones pop up all the time.
Constantly. A relentless stream of new DeFi lending protocols emerge, often with novel features, innovative token models, maybe aggressive incentives to grab liquidity. These new entrants can gain traction quickly, offer higher yield, unique collateral types. They force Aave to constantly adapt, innovate, differentiate itself.
So it's a nonstop battle for market share.
Absolutely. For users, liquidity, developer talent. This demands relentless innovation and flawless execution from Aave just to maintain its leading position in TVL. It has to constantly prove its value.
And regulation. That's the big shadow hanging over everything in crypto. How does it specifically impact DeFi lending protocols like Aave, especially with those institutional ambitions?
Yeah, this raises a really important, complex question about long-term viability, operational freedom, even how we define DeFi. Regulatory uncertainty around DeFi lending is a significant, ever-present risk. Governments, regulators globally, the SEC, authorities in Europe, Asia, they're still grappling with it.
How do you classify these things?
Exactly. Are they securities, commodities, banking services, something entirely new? This lack of clear, harmonized rules creates unpredictability, potential legal landmines.
So an adverse ruling could really hurt.
Profoundly. Unexpected new laws, restrictive interpretations, they could impact Aave's operations, its user base, its ability to innovate freely. Imagine if certain lending activities get deemed unlawful without specific, maybe impossible to get licenses for a decentralized protocol.
That would stifle innovation, maybe lead to crackdowns?
Could do. And this regulatory fog makes that institutional adoption we talked about much harder. Institutions need clarity, legal certainty, compliance before committing serious capital. It's a constantly moving target. Navigating it successfully while staying decentralized. That's critical for the journey to $600.
And security. We've seen it happen too many times. A big hack can just derail a project, wipe out trust, funds, reputation. How big a factor is smart contract risk for Aave?
It's an inherent, ever-present challenge for any DeFi protocol, Aave included. Despite being one of the most rigorously audited, battle-tested protocols out there, the complexity of smart contracts means vulnerabilities can always emerge.
From unexpected interactions or new attack methods.
Precisely. And if exploited, these vulnerabilities could lead to devastating losses for users. That would inflict severe, maybe irreparable damage to Aave's reputation, its TVL.
We've seen those horror stories. Millions, billions lost.
Unfortunately, yes. Flash loan exploits draining pools, re-entrancy attacks siphoning funds, oracle manipulations causing bad liquidations. Even a seemingly minor exploit can erode user confidence massively. Makes it incredibly hard to attract new capital or even keep existing liquidity.
So a lot of security measures have to be top-notch.
Absolutely critical. Robust infrastructure, continuous audits, bug bounty programs, rapid response mechanisms, all vital for maintaining trust and preventing a catastrophe that could stop its growth cold. It's a constant state of vigilance.
And ultimately, even with all its strengths, Aave isn't immune to the wider crypto market, is it? It still kind of rides the Bitcoin and Ethereum waves.
That's absolutely correct. It remains highly dependent on broader market cycles. While it has strong fundamentals, great features, a dedicated community, its token price tends to track the momentum of ETH and BTC very closely.
They set the overall mood.
They really do. Dictate sentiment, risk appetite, capital flow. When BTC and ETH are running hot, the whole market tends to benefit. Conversely, a prolonged bear market, a big downturn in those foundation assets, that would naturally dampen Aave's ability to rally, regardless of its own progress.
Even the strongest projects struggle when the market tanks.
They do. Investor sentiment shifts to risk off, capital gets withdrawn. It's a powerful external force you can't fully escape. Aave is like that powerful ship on the crypto ocean we mentioned. Great sails, engine, crew, but its direction and speed are heavily influenced by the market's currents and winds.
Needs a favorable tide to really push towards $600.
Unquestionably.
Okay, so let's say Aave does manage it. Hits $600. What does that really mean for the wider ecosystem? It feels like more than just a price target for holders. Right?
Oh, indeed. It'll be a moment of profound significance. A $600 AAVE wouldn't just be a celebration for investors. It would fundamentally signal a full-blown DeFi renaissance.
A renaissance, wow.
Yeah, representing not just renewed growth, but a sustained era of innovation, and critically, a huge surge in investor confidence across the whole DeFi sector. After periods of volatility, skepticism, regulatory fear, hitting that valuation would be a powerful validation. Validation of the tech, the potential of DeFi.
So a shift from maybe pure speculation to more mature, utility-driven growth.
That's the implication. It would suggest the market, including institutions, is recognizing the intrinsic value, the real-world applications, the long-term viability of protocols like Aave, moving beyond hype to genuine adoption, deeper integration into finance. It would declare loud and clear, DeFi is here to stay, and it's thriving.
And hitting that level would also rebuild confidence, specifically in DeFi lending, wouldn't it? Which has definitely faced challenges. Why is restoring that trust so important?
Connecting it back to the bigger picture, yes, hitting $600 would profoundly reestablish confidence in decentralized lending as a foundational cornerstone of Web3 finance. Lending protocols went through serious stress recently. Extreme liquidations, worries about bad debt, general fear that hit user trust hard.
Yeah, definitely some shaky moments.
A strong Aave performance, reaching a landmark valuation like $600, would serve as powerful validation, proof that the fundamental utility is there, the resilience, the security design. It demonstrates with real market evidence that the mechanisms work, risks can be managed, capital can be allocated efficiently outside traditional systems.
And that renewed confidence could bring people back, or bring new people in.
Exactly. It would be a magnet, attracting cautious retail users, hesitant institutions, maybe folks who got burned before. It would also draw in more talent developers, entrepreneurs, innovative capital, cementing DeFi's role, accelerating innovation and lending. It proves the model is viable, sustainable, powerful.
And finally, looping back to institutional adoption again, what's the implication for them if Aave hits $600 or goes higher? How does it change their view of these digital assets?
This touches on a really important question about how perceptions of crypto assets evolve, their legitimate place in portfolios. A $600 AAVE would undoubtedly attract fresh institutional capital. Not just DeFi generally, but specifically to DeFi governance tokens as a distinct asset class.
Which might seem alien to them now, investing in a governance token.
Totally. Might seem too alien, too risky, doesn't fit their mandates. But if Aave hits that valuation, driven by real utility and a robust ecosystem, it powerfully demonstrates these tokens offer not just yield and utility through staking, participation, but also significant verifiable capital appreciation.
Shows a maturation of the asset class.
A profound maturation. Moves it beyond pure speculation. Elevates governance tokens like AAVE from niche, high-risk bets to a more mainstream, legitimate asset class for sophisticated investors. It provides a compelling case study for TradFi. Shows that carefully chosen, fundamentally sound, decentralized assets can deliver substantial returns, potentially within a compliant framework.
Changes how they value the building blocks of DAOs.
Exactly. Pushes them into a whole new realm of investment consideration.
Okay, let's look back for some lessons. We know protocols can surge dramatically when things align. Can you give us an example from Aave's own history, a time it really took off?
Absolutely. A crucial story here is DeFi summer back in 2020. That was a period of just explosive growth, unprecedented innovation in DeFi. And Aave wasn't just watching, it was actively at the forefront, leading the charge.
What did they do then?
During that exciting time, Aave surged dramatically in value and adoption. It pioneered things like flash loans, which we discussed, and it introduced highly incentivized liquidity mining programs.
Rewarding users for providing liquidity.
Precisely. Offering attractive rewards, often AAVE tokens, to users who deposited assets into lending pools. This attracted vast amounts of capital, drove TVL way up.
So that history shows its capacity for explosive growth.
Clearly demonstrates it. When market conditions are right and its innovative features resonate with the ecosystem, boom. It showcases how novel functions, strong community engagement for liquidity can rapidly translate into token value and market leadership. A powerful reminder of its track record.
You mentioned RWAs earlier, real-world assets, and Aave's push there. Is there another big protocol that's successfully done something similar, maybe offering a blueprint?
Yes. What's fascinating here is drawing a parallel with Maker.io's strategic and, frankly, very successful pivot into real-world assets. MakerDAO, issuer of the DAI stablecoin, realized they needed to diversify their collateral beyond just crypto to enhance stability and attract new capital.
So what did they do?
Their strategy involved carefully integrating tangible off-chain assets like U.S. Treasury bills, other traditional debt as collateral for minting DAI.
And that worked.
It demonstrably did. It shows how established protocols can regain relevance, enhance stability, attract entirely new capital pools by integrating tangible assets. For Aave, this is a compelling practical case study. Adaptation, diversification, expanding horizons.
Proves DeFi isn't just about crypto assets. Needs that bridge to TradFi.
Exactly. It validates the path Aave is taking with its own RWA initiatives, shows a proven way to diversify, penetrate deeper markets, achieve long-term sustainability.
What about other major DeFi players? What can their growth tell us about Aave's potential, especially how activity fuels token price?
Well, the growth of Uniswap, the leading decentralized exchange, provides another compelling example, offers valuable insights. Uniswap has consistently seen its UNI token surge when trading volume and liquidity flow strongly back into DeFi.
A direct correlation. More activity, higher token price.
A direct and powerful correlation. Increased usage, higher trading volume, robust liquidity provision. It illustrates that link clearly. When more users swap, more LPs provide capital, the protocol captures value through fees, network effects. That value gets reflected in the token price.
Okay, that makes total sense for an exchange like Uniswap, where volume is everything. But Aave is a lending platform. Are the dynamics exactly the same? Does high borrowing automatically boost AAVE like trading boosts UNI, or is it more nuanced?
That's an excellent point, a critical distinction. The dynamics converge and diverge. For Uniswap, more volume, more fees, direct economic incentive tied to UNI. Clear. For Aave, higher borrowing means greater use of deposited capital. That increases yield for lenders, which attracts more deposits, boosting TVL.
So it's less direct fee per transaction, more about overall activity and yield generation.
Right. While not a direct fee per trade, the increased activity does generate revenue for Aave's protocol through interest rate spreads, other mechanisms. That revenue can be used, say, to buy back AAVE tokens, fund development, creating indirect demand.
But more importantly, high borrowing signifies trust. Need.
Exactly. High borrowing demand signifies trust in Aave's security and efficiency and a fundamental need for its lending services. This strong utility and the resulting TVL growth directly underpin the demand for AAVE, especially for governance and security staking.
Okay, so the mechanism differs, but the principle holds. More utility, more activity, more liquidity equals higher token value potential.
Precisely. Growing TVL, increased flash loan volume. Those are strong signals. Aave is being actively used, capturing essential DeFi liquidity, underpinning AAVE's fundamental value.
And one more example, how can pure utility drive dramatic repricing, beyond just speculation or market waves?
If we connect this again, the Lido and ETH staking boom is incredibly relevant here. Lido Finance, the liquid staking protocol, saw its LDO token reprice dramatically after the Ethereum merge and the huge growth in ETH staking that followed.
Because it provided a crucial service.
Exactly. It demonstrated how utility-driven protocols, offering essential services like liquid staking, can see tokens repriced based on real-world adoption. Integral network function, undeniable demand. Not just hype, Lido offered a way to stake ETH without locking it up, giving back ETH. As ETH staking grew, Lido's utility soared. It became critical Ethereum infrastructure.
And the LDO token reflected that fundamental value.
Faithfully. It's a powerful model Aave aims to emulate. With its governance tokens securing the protocol via the safety module, with GHO increasing internal utility, Aave is building fundamental use cases that could similarly drive a utility-based repricing. That deep intrinsic value makes $600 more attainable through genuine adoption, not just speculation.
Okay, for the data lovers in our audience, the chart watchers, what are the key metrics, the key charts we should be tracking on Aave's journey towards $600? Where should they focus?
Well, for any serious look at Aave's potential, the AAZE historical price chart is fundamental. Essential, comparing current levels to that May 2021 all-time high, around $661. That gives you the visual scale of the journey required.
Just seeing the gap.
Exactly. But it's more than that. The chart reveals historical volatility patterns, accumulation periods, distribution periods, crucial resistance and support levels. These are vital for understanding potential price moves, key psychological barriers. Aave needs to break through confidently.
Technical analysts would be watching patterns.
Meticulously, looking for things like inverse head and shoulders, cup and handle formations, sustained breakouts above previous highs. ideally with significant volume confirming the move. Understanding that historical and technical context is foundational.
And total value locked, TVL, you've mentioned it a few times. It feels like the big indicator in DeFi for health and adoption, right? How crucial is tracking Aave's TVL?
It's not just crucial, it's absolutely critical. Tracking TVL growth gives a direct, often strong correlation with token price performance across DeFi. A consistently rising TVL indicates several vital things: increased confidence from users, both retail and institutional, greater active usage of core services, improved capital efficiency.
So more assets locked means a healthier protocol.
Generally, yes. It signals robust health, indispensable utility, a growing ecosystem. More capital means more activity, more revenue generation through interest, strengthening its market position. Think of TVL as the literal lifeblood of a DeFi protocol. The more it flows, the healthier the system, the more valuable Aave tends to become.
And people can track this easily.
Oh, yes. Platforms like DeFi provide real-time, comprehensive data on Aave's TVL across all its chains. Very transparent.
What about those flash loans you mentioned? Are they a good metric to watch, a dynamic indicator?
Absolutely. Monitoring the flash loan volume trend acts as a direct, dynamic indicator of broader DeFi usage, and specifically, the adoption of one of Aave's key innovations. Flash loans are often used for complex arbitrage, efficient liquidations, collateral swaps, sophisticated DeFi maneuvers that maintain market efficiency.
So high volume means Aave is being used for complex stuff.
Exactly.
Yeah.
Sustained or increasing flash loan volume suggests active, complex, high-value interactions within the wider DeFi ecosystem, leveraging Aave's unique capabilities. It signals Aave is an integral part of the DeFi plumbing, facilitating sophisticated operations. That deep, fundamental utility is a very strong bullish signal for its long-term value.
Okay, for the what-if scenarios,
Yeah.
how can we project Aave's market cap at different prices? And what does comparing that to peers tell us about the realism of hitting $600?
Yeah, this raises a really important practical question about relative valuation. Where would it sit in the DeFi hierarchy? Analyzing market cap scenarios lets us compare Aave's potential valuation at, say, $100, maybe $300,
Yep.
and the ambitious $600 target against peers like UNI, MKR, COMP.
How do you do that?
You calculate what Aave's market cap would be at those prices given its circulating supply. Then you see how that stacks up against the current market caps of other top DeFi protocols. For instance, if Aave at $600 would put its market cap way beyond even the biggest current DeFi players, that might signal an overly ambitious target. Requires unprecedented growth.
But if it sits more comfortably within that top tier,
Then it provides a more realistic perspective on its potential positioning, the scale of capital needed. This comparative analysis is crucial for judging if the valuation is fundamentally supported by the market's capacity.
and finally, circling back to GHO, Aave's stablecoin, how can we track its impact? Understand its role in Aave's growth.
Tracking the GHO stablecoin adoption curve, specifically its minting growth, its usage across the ecosystem, that's a key catalyst to watch. GHO is Aave's native decentralized stablecoin. Robust, sustained adoption, more GHO minted, wider use cases, integration in other DeFi apps that indicates increasing utility and liquidity within the Aave ecosystem itself.
Making Aave stronger internally.
Exactly. More users minting, holding, using GHO reduces reliance on external stablecoins, creates a more integrated internal economy, strengthens the overall protocol. And this increased utility directly supports the Aave token's value. Aave holders govern GHO, so they benefit from its success.
Where can people find data on GHO?
You can find regular updates, reports on GHO's development and adoption through the Aave official blog, and reputable crypto news outlets like Decrypt or CoinDesk usually cover major milestones. #tag outro.
Wow. What an incredible deep dive into Aave's potential. We've really covered a lot of ground. Its current position versus that historical peak, the powerful catalyst that could drive it to $600, the very real risks and challenges, and what that $600 target truly signifies for the wider DeFi renaissance.
It really highlights how multifaceted Aave's journey is. Complex, influenced by market sentiment, tech advancements, that ever-evolving regulatory landscape. The path to $600, it's undeniably challenging. Competition, security risks, lots of hurdles. But it's also paved with significant, potentially game-changing innovation and strategic pivots that could really redefine its future, solidify its place.
We really hope this deep dive has given all of you listening a clearer, more nuanced picture of Aave's trajectory and the exciting, complex future of decentralized finance. It leaves us with a pretty provocative thought, doesn't it? If Aave can successfully integrate RWAs, attract that institutional capital while holding on to its decentralized core, and keep innovating like this, could it become more than just a DeFi leader? Could it be a fundamental bridge to a new global financial system? Connecting TradFi and DeFi seamlessly, we'd love to hear what you think. What stands out to you about Aave's potential or its challenges? Let us know in the comments. And hey, if you're bullish on Aave or maybe just curious about where DeFi is heading and want to stay informed, please don't forget to like this deep dive, subscribe to our channel, and definitely hit that notification bell. Your support, honestly, it means the world. It really helps us keep bringing you these in-depth crypto insights every single week. Liking and subscribing genuinely boosts our visibility in the algorithm, helps more curious minds find these conversations, and your comments. They tell us exactly what deep dives you want us to tackle next. It truly makes a tangible difference. Thanks so much for joining us.